Kenneth Andrade of Old Bridge Capital joins us right now. Remember, they are launching a public market focused alternative investment fund. This is the firm's maiden AIF. To discuss this in further detail, as I said, Kenneth is with us. Kenneth, good morning, and thanks so much for taking the time out. Obvious question, why this fund, why this structure, and why this time to launch an AIF?
Niraj, we're in the process of launching it. I think the product could be available sometime during the next month in terms of for investors to subscribe to. And why an AIF structure? I think it's a pool structure. From an operational point of view, it's simpler to understand. It's easy to put it together, and easy to operate. So that's essentially why an AIF structure. We're not doing anything from an investment process, which is very different. It's an extension of what we've been doing for the last 14 months that we've been in operation. We run the same investment process. The entire ideation is around building a portfolio into the current environment, looking for pockets of opportunities where our valuations are cheap, and put it together.
Okay. Kenneth, the interesting bit is you stopped accepting money in the two existing portfolio schemes, but you're launching a fresh fund. I mean, what is this? Is this a factor of the structure, and are you continuing to be bullish on the markets as well, or that call remains uncertain?
So, Niraj, this is an extension of what we already do. There's no difference from what we do in the portfolio management business and what we do in the alternative investment fund. While we take money for a limited amount of period in the portfolio management piece, the entire ideation is that you raise capital in one go, which is what we did between August of last year to December of last year. We built a portfolio during that period into January, February, and created an inventory of ideas. We reviewed the portfolio over a couple of quarters, and then we raised the second tranche in that portfolio. So that's the ideation of how we put money to work. The entire exercise of reaching out to investors is to understand is firstly, if we have an inventory of ideas which are either the same or a little different from the previous product, and build it forward. So even with the current category of even with the new vehicle that we are looking at putting together, the new vehicle would be essentially looking at a continuation of the existing portfolio with minor changes that are there. This pooled vehicle also allows us to have a slightly longer tail, which was absent in the portfolio management product, though it won't have a material difference, won't have a significantly material difference. It's just ease of execution that is there with a pool structure. So you're right when the observation is that we closed subscriptions to or we have limited subscriptions to an existing
fair call, but the option is open here. Kenneth is slightly short of time, so just want to get in one quick question in. What's the amount of money that you want to raise, and would you deploy a larger portion of this into the mid cap and the small cap at the non-nifty end of the spectrum?
So we're looking at, I go back to history again, and we have a limited history that we can talk about. And in the first cycle that we raised money in our all cap fund on the portfolio management business, we raised about 400 crores. We did the same number as we did in the second round, which is about 400 crores. So we checking market. We basically looking at a similar fundraise. Or we taken approvals, or we will be in the process of taking approvals to do 100 plus of 300 crore raise. That plus 300 is a green show option that is there. In terms of places that we would be looking for to allocate capital to, we like to look at industries which are not doing very well, okay, are at the cyclical low, and try to pick the largest company in that particular segment of the market. And then wait for the cycle to rebound itself. There are a number of those industries that are doing exactly the same thing at this point in time, and we'll be happy to allocate capital out there. A lot of it is already there in our investment process, and it's already there in our portfolios.
Kenneth, we wish you all the best for this fund. And thanks so much for taking the time out and being with us today.